Hello, good evening from central London. And today we are going to be talking about the Bank of England is set to cut interest rates tomorrow. Tomorrow, Thursday. So, this is something that's been anticipated in the professional industry. A lot of people who I speak to. Obviously, it's not a done deal. Is it going to happen? Well, we're going to share today as to if it does happen, what does that mean? And already lenders are already anticipating of what the Bank of England is going to do. So first things first, as always, we want to get some technical stuff out the way. Make sure you can hear me. Make sure you can see me. I know there's probably just a couple of people on right now, but as I progress, it will be great to give me a thumbs up. Today is a live stream whereby we always like to have some questions come up. We like this to be interactive. We'll also be talking about slightly about the confidence coming into the market and whether that confidence that we've been seeing over the course of the last few weeks and months from property investors is also at the back of this anticipated cut in interest rates, but also those landlords who've been holding, who have been dreading their mortgage package. Was saying we are going to be reviewing the Bank of England set to cut interest rates tomorrow. I'm sure that's going to be good news to many buy-to-let investors out there who have been or are in 5-year fixed rates and dreading having to renegotiate that with their current lender or just going out and shopping. So we'll also be discussing to what lenders are doing or have been doing at least up to now as we come up to those potential cuts, because it's not a done deal, right, guys? But it is something that's anticipated across the industry. Now, we'll also be discussing about the confidence of landlords leading to this over the course of the last few weeks and what type of landlords they are as well, and the impact, of course, of mortgage rates. So that's the topic today, but we are wanting this to be a Q&A and interactive as we always like it to be. We have Amrita online. Yes, Danny, I can hear you. Great. That's good news because I lost you guys there for like a couple of minutes. Okay, so one of the first articles I wanted to review here is one from Property Eye, and that is Bank of England set to cut interest rates this week. UK borrowing costs are set to cut this week in what could be the first of multiple interest rate cuts in 2025. Pressure in increasing on the Bank of England to resume cutting interest rates amid growing economic concerns. Now, policymakers are expected to announce a reduction in interest rates on Thursday, tomorrow, from 4.75% to 4.5%. With markets pricing in at 84% chance of this cut. The decision comes as inflation slows and the UK economy shows signs of stagnation. Of course, this has a lot to do with the budget from Labour a few months, and it'll be interesting that what's going to happen in April as well. So we have Suna Streeter, head of money and markets at Hargreaves and Lansdown, told the press the scene has been set for the rate cut next week. Now, tomorrow, with December's dip in inflation and the flattening economy taking center stage. Three policymakers wanted to see a rate cut at the last meeting to boost the growth, and it's looking like there more will be follow their lead next Thursday. Tomorrow, Thursday, vote for a reduction. For homeowners with variable or tracker rate mortgage, a rate cut could lead to a lower monthly repayments. However, the effects may not be immediate or as significant as some expect. If you're on a fixed rate mortgage, the rate cut won't affect you immediately because it's already priced into the market, said Sarah Coles, head of personal finance, Hargreaves Lansdown. So, what does this mean, guys? Well, effectively, I'm sure if you're on a fixed rate mortgage and you fixed that, let's say last year, 2 years, for 5 years, this is something that's not going to impact you. However, you may be wondering if it was better off for you to go on a tracker mortgage and see if the rates would cut. I've spoken to quite a few brokers, and that isn't a sensible way to go, because it can go any which way, right? It can continue going up in terms of interest rates or down. All you know is what you know now, if that was a year ago or two. But I do know quite a few landlords that actually are on those trackers, and I'm sure this is going to be good news for them as these rates reduce, and whether they are going now to be in a position of actually, I'm going to secure a fixed rate if that trickles down to actual lenders. But one thing what we can see, and asking that same question, is that lenders have already started to react anyway. And this is something I'm going to share with you, if I can find it. Here you are. So this article by This Is Money, let me switch this off. When did this come out? This is the 3rd of February, so a couple of days ago. Again, good news for those buy-to-let investors, at least those who are on a tracker. 2 lenders cut mortgage rates ahead of Bank of England decision on Thursday. 2 major lenders have announced mortgage rate reductions ahead of the Bank of England's anticipated interest rate cut later this week. Barclays announced it would be cutting rates on some of its mortgage for home buyers and people remortgaging. It also is launching some new rates for borrowers buying energy efficient homes. That's interesting. And I've seen a lot of talk about this, by the way, about lenders providing new rates for energy efficient homes. So it's interesting that there is an incentive there to buy efficient homes, or at least, there is an advantage from a mortgage perspective. Anyone from listening in has any experience on this? I'll be very, very interested. It's also okay. So it's offering a 5-year fixed rate starting from 4.13% for those buying a home with energy performance certificate EPC of A to B. I don't know many landlords who have properties with EPC A to B, by the way. As well as the green rates, it is also launching a 2-year tracker mortgage with 5.24% with no product fee. This may be of interest to borrowers who believe interest rates will continue to fall over the coming year or so. Heading lower again, fixed rate mortgages have risen in recent weeks, but now look to set to fall again. So trackers follow the Bank of England's base rate plus a set percentage. In this case, it's base rate plus 0.49%. If the base rate was cut to 4%, as markets are forecasting, then this would mean the mortgage rate will fall to 4.49%. I love this explanation. So anyone on a tracker or thinking of going on a tracker, then you could pretty much see where this is going. Now, the other lender that decreased mortgage rates is Coventry Building Society, which announced this morning that it would be cutting its fixed rates by 0.27%. And remember, guys, this article was a couple of days ago, and we're all anticipating this, but anything can happen tomorrow of the Bank of England. So interest rate cut tipped for Thursday tomorrow. The changes by Barclays and Coventry Building Society come ahead of the next Bank of England's interest rate decision taking place tomorrow, Thursday. Financial markets are predicting that the base rate is likely to be cut from 4.75 to 4.5%. So this has translated to falling SONIA swap rates, bank lending rates, which influence the pricing of fixed rate mortgages. Over the past 3 weeks, 5-year swaps have fallen to 4.12% to 3.92%, and 2-year swaps have dropped to 4.2 from 4.26 to 4.06. Despite this, fixed mortgage rates have been edging higher. This has been in response to the rise in swaps. Okay, so it's all about swaps. Will mortgage rates continue falling? So before I get into this one, let's see if there are any questions from anyone. And it will be interesting to find out your thoughts. Will interest rates continue falling? I know that some expect to have, at the very least, two cuts this year. Whether we'll get them, and of course, this depends on many factors. So we have a question here from Edmund. With the Bank of England expected to cut interest rates, I'm wondering how this will impact mortgage rates for landlords. Well, we can all already see, at least for those landlords who are on trackers, it would be good news, Edmund. However, if you're on a fixed rate and it doesn't end until 5 years from now or 4 years, then it's not going to impact you at all. However, if you are waiting for your mortgage, your fixed mortgage to come to an end, this will be good news. And for anyone investing or looking to invest in the next few months, again, good news as well, as this, of course, will impact the yield that you will get and the return. So I hope that makes sense. I know there are other questions coming in, and I promise to get through them. I am keen to get through this article before we go through any more. So please do bear with me, guys, and I appreciate you all for jumping in. So what we have here, will mortgage rates continue falling? Well, Mark Eaton, Chief Operating Officer at Lender April Mortgages, thinks it's likely that interest rates will be cut this week. With a slowing economy, a risk of short-term inflation hike, and Trump's escalating trade war, markets appear to be anticipating the Bank of England cutting rates on Thursday. I'm just going to take a sip of water so you can digest that, especially with Donald Trump, President Donald Trump, that is. So I know on that same topic of the US, I know that there is a lot of, how would I say this to be diplomatic, uncertainty and, unpredictability. And I know when he's moved into the White House, a lot of markets reacted in a positive way. And yet I think as the dust settles, from what I hear and see, there is sort of people holding back to see what is happening, what's going to happen, especially when it comes to these trade wars. So expectation of the base rate cuts are driving a reduction in swap rates and increased competition amongst lenders, which on the face of it is good news for borrowers and good news for landlord borrowers as well. However, Eaton warns that borrowers need to keep their heads in a yo-yoing mortgage market. Unfortunately, the risk is that borrowers read too much into this and start believing that mortgage rates are guaranteed to consistently fall, added Eaton. With so much economic and political uncertainty, the mortgage market remains highly vulnerable to further rate volatility this year. The yo-yoing effect that we've become accustomed to is likely to continue, and this means borrowers need to give careful consideration to how they could cope with higher monthly mortgage costs and the risks that come with this. So borrowers should be aware that chasing the short-term rates may not be in their best interests. Okay. That's a great article. So the topic I wanted to actually pick up on this was also from a point of view of first-time buyers, because as we've seen better mortgage rates kick into the market this year in comparison to 2023, because I do get a lot of people sort of saying, Danny, the mortgage rates continue to be very high. Yes, high compared to what? Definitely higher compared to sort of pre-2021. There was a period of cheap money, a good 10 years or so. And, a lot of, if we're talking from a landlord point of view, there was a lot of the property investors that were able to enjoy that cheap money. And that's come to an end. Will those times come again? I don't know. What I do know is certainly it's not going to come back anytime soon. And what we can see is normal, the new norm is going to be around about that 3.5%, hopefully within the next couple of years. But anyone expecting sort of that 2% rate, I think you're probably going to be waiting for a while. But again, I'm no economist. I can only interpret the data that I read on a day-to-day basis and those investors who I speak to as well. But one thing that has changed the dynamic, at least, has been from first-time buyers. So first-time buyers seem to have sort of being able to get back on that property ladder for a lot of them. One thing I know is, having spoken to quite a few landlords, I know that a few tenants who have decided to move out and give their notice to vacate, a lot of them actually have done that because they have decided to purchase a property. And this indicates, of course, that, from a first time buyer point of view, the numbers now work for them to be able to get onto the property ladder, as opposed to be paying those high rents, which we've seen surge and escalate over the course of the last 3 to 4 years. In fact, what we do know, at least here in London, we see that has increased on average around about 30% plus over the course of the last 3 to 4 years. Those are big numbers. And of course, there are different factors influencing this, including mortgage rates, but also inflation, the cost of maintenance, and cost of obviously regulation as well has had a huge impact. Renters' rights bill and so forth and so forth. Talking about the renters' rights bill, we did a great video which has been extremely popular over the course of the last 10 or 12 days. If you haven't checked that out, make sure you go and see that. And we have a webinar as well. Link will be on the description and on the comments. I'll make sure that my team pins that for you to have a review and register. But yeah, going back to first-time buyers, definitely getting on the property ladder. And also, we have quite a few landlords exiting as well. But definitely not a mass exodus, according to an article from Rightmove. Anyway, so we've gone through that article, and I have a few questions I want to go through. And we have here from Leslie: I have seen that some lenders have already started reducing rates, but which ones are leading the way, and how competitive are the new offers? Great question. We have another article here that perhaps can provide shed a little bit more light in terms of lenders. But for now, to answer your question with the information that I have to hand, it will be Barclays and which other one is it? Bank of England. Yeah, so Barclays would be one of them, and I hope that helps. I'm trying to gather the information of the second one, but I'll make sure to Coventry Building Society. I hope that helps. Barclays and Coventry Building Society, Leslie, are ones of a few that have already started to make a move on that. It seems like mortgage brokers are still shifting in response to this news, but what specific deals should landlords be looking at right now? I'm not a mortgage broker, so I'm not in a position to give you advice on that. The best advice I could give you is certainly speak to a mortgage broker. Well, rate cut sounds like good news. Are there any potential downsides for landlords that aren't being widely discussed? That's a great question. I guess the best answer I can give you, having spoken to a mortgage broker just in the last week, when it comes to the fees that you pay and the fixed term that you secure yourself into, in terms of whether it's 2 years or 5 years. Last time I spoke to a broker, he did say to me, Danny, investors need to be very strategic in what they're doing, because the fees are so high that you pay. Sometimes it may not make sense for you to do a 2-year deal and pay a really high fee, waiting for the mortgage rates to come down, only to have to pay that same fee back again in 2 years' time, and the fee hasn't really shifted. You're going to find yourself in a worse situation. So what he did explain to me is, Danny, from a mortgage broker perspective, I'd love for you to do 2 years, because in 2 years' time, I'm going to have to do that again for you, and I get paid handsomely for it. But the reality is that in some cases, and again, this is a case-to-case scenario, in some cases, in most cases, it will be better off for you to just secure that 5 year. You pay that high fee, and you don't have to worry about any fees again until 5 years' time. Otherwise, you're almost like gambling. You're betting against the market. You're saying, you know what, I'm taking 2 years because I don't know what's going to happen with the mortgage rates. They might come down, and you know what, I'm going to, but then it may not pay off. And again, you end up paying that very high fee again in 2 years' time. I hope that helps, Stephen, James. And then we have another one here from Manny Hale Panday or Ponday. Apologies if I'm pronouncing that incorrectly. I own a few properties in the north of England. Will a rate cut have the same impact on house prices and rental yields across different regions? So my understanding from prices is that you get cheaper money or cheaper borrowing, and that directly has an impact on house prices because it means there's more demand. So in this instance, for example, if the numbers makes more sense, and I know it's a very slight change if there is a change tomorrow, but it does make a difference. So if it does, then obviously that motivates more buyers. And if there's more demand, then what happens with prices? It does go up. Is it going to skyrocket? Is it going to boom? No, it's not. That's the reality. We're way far from any type of boom, if there's any coming. But what we do know from a landlord point of view, a property investor point of view, we do know that there is more confidence. And that is an article we're going to be reviewing very shortly. So if you're just joining, we have discussed with regards to the Bank of England set to cut those interest rates, what that means, but also lenders already anticipating this and already making some rate cuts and bringing in some new packages. So we have here from Wise Process, the media keeps saying a rate cut will boost the housing market. Does this mean we should expect more competition when trying to buy investment properties? Absolutely. As I said, cheaper borrowing, it means that you're going to have more competition. It's just 1 + 1 = 2. But again, to what extent? That is the question, Wise Process. And I don't expect any boom anytime soon. That being said, we are just around the corner from spring, and spring does tend to be busy. So I hope that helps. Exotic Turdo, hey, up. How do you know there's cuts ahead? What do you analyze, please? Have a crystal ball? No. We're just working on the data that we have, the information that we have. Lenders already cutting their interest rates, and do they know something we don't know? I haven't got a crystal ball. We're just working based on what the markets are doing and getting ahead of time. It could be there are no cuts tomorrow. So I've been considering switching from long-term rentals to short-term rentals. Would a rate cut change the outlook for one strategy over the other? It depends. So to answer your question, I don't know your specific scenario, Leslie, but what I will say is for those landlords who perhaps are on the fence of switching to short-term rentals to be able to get a better return, if there are no rate cuts, could that motivate them to, yes, come off the fence and actually decide to go on a short-term rental? Then yes, it will influence. It will influence that for sure. So I think it does have an impact, and one thing does have to do with the other if you're considering short-term rentals to begin with. Okay, I'm going to put the questions on pause as I jump in to my next article. So my next article actually may answer quite a few of your questions with regards to fixed rates or tracker. So this is money, the best buy-to-let mortgages for landlords. Should they fix or risk a tracker? So buy-to-let landlords are being hit by higher interest rate, higher costs, and less friendly tax regime. There you go. This is to answer your question, Leslie, as well. If they're being hit by all of these and they can get a better return from shortlets, but be very careful. You can end up out of pocket with shortlets if you don't know what you're doing. So my advice is certainly speak to a professional. If you are looking for a professional, whether it be short lets or referral for a professional agent anywhere in the UK, we've been managed to build a great network of vetted agents. So make sure you just fill in a form on the comment. It will be pinned on the comment. Okay, there are almost 2 million buy-to-let properties that have mortgage attached, according to the Trade Association for the Banking and Financial Services sector, UK Finance. And I missed this one here, which is many have seen their mortgage costs spiral, meaning by and large will be hoping for falling interest rates just as much as homeowners and first-time buyers. Now, the point here also is to actually, I'm going to divert in a little bit, and that's talking about section 24, which is, of course, the removal of landlords being able to put their interest, what they pay for mortgage, as an expense. And that, in combination with mortgage interest increasing, was just a combination far too much for many landlords to bear. And we'll talk a little bit more about that, because that goes hand to hand as to the pain that a lot of landlords are feeling with regards to the increase of mortgage rates over the course of the last couple of years. So the average 2-year fixed rate buy-to-let mortgage is currently 5.39%, according to Money Facts, and the average 5-year fixed rate is 5.56%. Not much difference there, guys, right? The lowest 5-year fixed rate deal, the market is currently 4.9%, while the lowest 2-year fix is 2.59%, albeit both deals come with very hefty fees. Again, what we discussed with regards to paying fees twice over the course of 2 to 4 years, or whether you just fix in 5 years, pay your fee, be done and dusted. So we look at what landlords need to consider when taking a new mortgage, and list some of the best deals available, both for those who own in their own name and for those who own a limited company. So how average fixed rate mortgages for buy to let have changed. Average 2 fix, average 5 fix. So let's look at this in terms of timeline. If we make this smaller, would be helpful. Whoa. So if you look at here, you've got the red line being average 2-year and blue line being average 5-year. 2022 and coming up to 2025. If you look at 2022, it starts right in the middle end between 2 to 4%, and they both start shooting up considerably. Straight up from 4%, right up above 6% as we reach 2023. At some point, as we came into the middle of 2023 to 24, it starts coming down sort of around about that 5%, or upper end of 5%. And then it shoots back up, and then comes back down ever so slightly back to around about that 5%. Around about that 5%. So, I mean, I don't see that major difference between 2 and 2-year and 5-year. Of course, there is a difference, but I don't see a huge amount of difference. And you can see that this 2-year is higher here at this point, which would have been sort of around about the second half of 2023. And then what happens here, interestingly, we can see that the 2-year, the average 2-year fix seems to be lower. That's interesting. So I hope you're following this, guys, and you're finding this helpful in terms of what's happened with the mortgage rates and where we think we are going. So, how cheap are buy-to-let mortgage rates? Many landlords who own with a mortgage will be seeing their profits decimated by higher mortgage rates, having been lured into a false sense of security by the ultra-cheap finance available in recent years. Mortgage buy-to-let investors often use interest-only mortgages to ensure higher cash flow, but when paying interest only, if the mortgage rate doubles or triples, so do the monthly payments. The average 5-year fixed rate buy-to-let rate 5.56% according to Money Facts. It means a typical landlord requiring a £200,000 interest-only mortgage on a 5-year fix will need to pay £926 a month in mortgage costs if buying or remortgaging at the moment, excluding fees. You know, it's interesting because I was also doing some research last week, and landlords, I think it was a 10% landlord within a context. I can't remember what that was, but they said that they saw their mortgage rates increase anywhere between £500 and £1,000. Now, of course, if you are in the south of England, anywhere in the south or southeast, and also around London, then that's probably going to be much more. I know a landlord personally who had a very challenging, I'd say probably a very challenging year throughout 2024. I mean, it had a real impact, not only from a business point of view, but his personal life as well. He struggled for months trying to refinance, remortgage. He had a total of, I think, around about 9 flats, or has a total of 9 flats. And the stress was right up there. Now, I know that there might be a few renters here sort of thinking, oh, well, boo-hoo, poor landlord, 9 properties. I get it. And I get the pain that renters are going through as well in terms of the rental hikes. But can we blame landlords alone? The simple answer to that is absolutely no. There are lots of factors, including these. A lot of landlords out there are roundabout breaking even. And if they are making a profit, at least a lot of accidental landlords out there, a lot of them have these properties to subsidize their pension, and to have some type of pension that's going to be worthwhile for them in their old age. Some say that buy-to-let shouldn't be a business, but in my view, what's happened with the government over the course of the last few years, not just blaming Labour, by the way, they have pushed this to more corporate landlords and those professional landlords. And there is a rise of professional landlords because of this. So this is falling in the hands of even more landlords who have big portfolios. And those are the only ones that can make the numbers work. So what we see is these independent accidental landlords being pushed out of the market more and more. And this is the doing, of course, of a lot of regulation coming into force. And we'll talk about the rise of professional landlords as well, by the way. So going back and keeping within the topic of mortgages, add to the cost of periods where the property is empty, repairs, maintenance, letting agent fees, compliance check, insurance, and service charge, and it shows how reliant many landlords will be on rents rising in order to turn a profit. Best mortgages and rates and how to find them. Mortgage rates have risen substantially. Okay, so this is just some sales literature. And since I was talking about the rise of professional landlords, and it's relevant to what we're discussing, let's just touch upon that, okay? So the rise of professional landlords, this is that without even speaking the rise of corporate landlords. Now, if you are not subscribed to my YouTube channel, there's a video coming out on Saturday, specifically on corporate landlords, not professional landlords, corporate landlords. This is a video that you do not want to miss, because the whole basis of it is Labour government, also Conservative, previous government. So the government and corporate landlords crushing small-time landlords being landlords of a couple of properties. So this is the rise of professional landlords take over the buy-to-let sector. So what we have here is rental yields are currently at record high, and yet rental purchases are at record low. Some have called the government's recent budget a death knell for buy-to-let, but the reality is more nuanced. On the other hand, smaller landlords were already leaving, and the sector and that's leaving the sector in droves. This was the case even before Labour's plans in March 2023. The supply of rental properties was down by a third year on year. High interest rates disappearing, tax reliefs, and incoming legislation had combined to turn this into an existing trend. But the budget certainly hit the accelerator. Fears of an imminent hike in capital gains tax second properties led to a fire sale. Almost 20% of all properties on the market this October were ex rental. So this article was November 26, 2024. So just around about 3 months ago. Now that's 20% of the overall properties on the market for sale. However, if you're in the capital in London, what we do know was last year, we know that 25% of properties at some point or throughout of properties on the market for sale were ex-rental properties. 25%, that's a quarter of properties that were on the market for sale in the capital were landlords selling up. And a lot of them were where properties were vacant, so no chain. Now, the bigger question, and what I've asked, I'm researching this because I'm a bit of a geek when it comes to this type of data. Again, I don't have a crystal ball, guys. What I do is I look at data, interpret that data for you guys. That's what I do. If you agree or disagree, leave me a comment below. I'm not going to get annoyed if you disagree, as long as you're putting a valid point and at least some validity, evidence behind that. Then it is what it is. So my point is this. The amount of landlords who actually decide to sell their property and the landlords who are successful in selling their property are two very different things. So I'd be interested to find out the data as to how many of these landlords actually did successfully sell their properties in 2024. Because 25% of properties on the market for sale, landlords makes a great headline, right? It's like, wow, 25% of properties, but how many of those actually sell? Sorry, a little bit repetitive, but I did want to make that point with that. So guys, we did look at the rise of to wrap up this point with regards to the rise of professional landlords. This says it best. It's hard to find public sympathy for landlords in an overheated housing market, but there has never been a greater need for private rental sector. The good news is that it's evolving rather than dying. So what's going on? While thriving rental sector is part of any healthy property market, it's fair to say that the UK had reached an unsustainable levels of buy-to-let around 2015, when 1 in 5 families were tenants. It's not hard to see why it's considered a good investment for those who can afford it. But of course, now what we do know is with the regulations coming in, but this bigger one, this is the big one. So typically, small investors buying a single property on interest-only mortgage. Until 2017, landlords could even deduct mortgage costs before tax, which was only paid on rental income profits. However, the issue now, and this is the nightmare combination, right? Mortgage rates increase, whilst at the same time, landlords are now being taxed on their turnover and not their profit. And this is crazy, because this doesn't happen in any other business. Landlords, as opposed to a business owner gets taxed on profit, not on turnover. Landlords on turnover, not profits, which is why we're seeing perhaps even landlords selling up, but selling up to restructure to be able to have their property on a limited company, because on a limited company, they can do that. So it could be a shift in the market as opposed to a mere exodus of landlords, which there is a small minority. Well, say small minority. There is a section of landlords who are decided to leave completely, and those are those accidental landlords. Okay, guys. I know there are a few more questions here, and we will go through these. Danny, some landlords are selling up due to tax and regulation changes. If rates go down, could this slow the trend of landlords exiting the market? Yeah, I would say that's a fair comment, because a lot of landlords perhaps are not getting the sale price that they would like to get. and yet they feel kind of forced to do that. So regulations to one side, I know it can be scary to quite a few landlords, but if they can digest the regulations, and if now suddenly they're with the mortgage rates coming down, and if it's coming up for renewal and they can make the numbers work, then they may not feel that they are forced to sell at a property at a price that they're not comfortable with, and perhaps ride the wave for another 2 or 5 years. And I saw a lot of landlords do that a couple of years ago, whereby it just didn't make any sense for them, but they can just about make the numbers work. And they're like, Danny, you know what? We're going to ride the wave, and stick to this and see if the property market picks up so I can get a better price on the sale of the property. So I hope that makes sense. And then we have Jonathan. I've heard that inflation is still a concern, even if interest rates are cut. Could we see them going back up in the near future if inflation rises again? So the answer to that is yes and yes. Inflation continues to be a concern. Anything can happen, and depending on what happens with the economy, inflation, and so forth, the Bank of England will respond accordingly. So that is to be seen. Yes, interest rates could rise as well as they can decrease. 100%. Sonia, I've seen lenders cutting rates ahead of the Bank of England's decision. Does it mean they're expected to significant drop, or is it just a short-term marketing move? It could be a short-term marketing move, and it could be they do nothing tomorrow. We can only, again, based on what lenders are doing, and a lot of professionals in the property professionals, that's what we're anticipating. But could be a short-term. Anything can happen for sure. So here, a disclaimer here, guys. Should have put this at the beginning. This isn't financial advice, and certainly isn't legal advice. Okay, but certainly I am a professional in the property industry and speak to landlords, investors on a day-to-day basis. Not only investors, but just home buyers and sellers, which is why I love to make these videos, because it's just sharing the general sentiment that I see out there. Talking about sentiment, this really brings me into my final article, which is with regards to sentiment and the confidence in the market. Okay, I can't seem to find the one with the sentiment in the market and the confidence in the market. But one thing I can say is that when it comes to buy-to-let investors, there seems to be much more confidence in the market. And I'm going to bring this up because it was such a great article. Here you are. So I want to attempt to share my screen on this one, guys. And this one is based on the confidence in the market from buy-to-let investors. So this was one just probably around 5-6 days ago. Landlord confidence gently rises, but huge fear of the rented rights bear. So again, for those landlords who can get over the regulations and just educate themselves, or simply just appoint a property professional, hopefully a property professional who is conducting themselves to the property mark standard. That's ALA. The mortgage firm Pegasus Insight claims there is gently increasing optimism amongst landlords. The latest landlord trends report for Q4 24 shows that landlord confidence about the future of their own letting business has increased year on year, 37% saying they feel good or very good about their prospects in Q4 2024 compared to 33% in 2023. Since mid-2023, there has been a general upward trend in a proportion of landlords feeling optimistic about prospects for their overall lettings business. Unsurprising, landlords report making a large profit are the most upbeat about this. 71%, with this falling to 33% for those making smaller profit. That's a given. And 8% of landlords who are either breaking even or a loss. Again, Whether some of these landlords who are breaking even or making a loss are on a tracker, then perhaps they can turn to perhaps making some type of profit with any changes that we're seeing from this week. Lenders already making cuts. I mean, to an extent, guys, does it really matter if the Bank of England doesn't make any changes? Let's say tomorrow Bank of England makes no changes and leaves rates at what they are, and you come back to me and say, Danny, you said that the rates would, the Bank of England were going to cut rates. It doesn't really matter. Lenders have already started to cut rates anyway, and that's what's important, right? That there are better deals out there that can help either whether you're a first-time buyer buying or whether you're a property investor, and that's trickling down the market. I hope that makes sense. So if you're just joining, guys, we have been talking, of course, with regards to the Bank of England set to cut rates. We have talked about the lenders who have already started cutting their own rates already, and some other opportunities as well with regards to lending out there, but also the history of the last 3 years when it comes to mortgage rates compared to 2 years to 5 years, and which one may be best for you. So we were talking about the confidence. So here we are, unsurprising landlord report. So on a quarterly basis, three measures show that a small uptick with optimism about business prospects. 32% positivity about capital gain tax, from 14% to 17% optimism about rental yield, nudging up slightly from 36 to 38. And this was an important one, guys, because of course the yield that you gain or the return that you get is very closely tied into what you pay from an interest rate point of view. So rentals going up, mortgage going down. I guess that's potentially good news for property investors out there. This gradual improvement in sentiment comes despite growing concerns over the potential impact of the Renters' Rights Bill. Around 3/4 of landlords think the bill will be negative for their own lettings business, 43 significantly so. This rises to 65% who believe the bill will have a significant negative impact on the private rented sector more broadly. Meanwhile, despite 73% of landlords say they increased rents in 2024, more than 80% claim they are currently renting out at least one property below market rates. And 62% of landlords say they plan to increase rents further this year. So there you are. Big numbers, guys. 73%. 73% increased their rent last year, 80% saying that they will increase their rent at least one property this year. And I believe the other smaller number was based on 60%. Yeah, on 60%. So listen, guys, I know that we are now coming to the end of this. So I'm just going to wrap up any questions that you may have here. As first-time investor looking to enter the buy-to-let market, would a rate cut make a right time to buy, or should I wait for further reductions? Again, I'm not here to provide financial advice, Edmund. I'd say that whatever decision you do it based on the information you have today. You can't bet against the market. It's something you cannot do. So my advice to you is, if your numbers can work right now, great. There is anticipation that there's going to be further rate cuts, but you won't depend on that. You make your numbers work on what you have right now. If you have some rate cuts further down the line, and if that's going to impact you somehow positively, then amazing. But otherwise, work with the numbers you have right now. Stephen James, I've got a few properties on the variable rate mortgage. If a Bank of England cut rates, how quickly will lenders pass on the savings to landlords like me? That is a very good question. In terms of how quick, I'm not exactly sure. But if you ping me a message, I'll be sure to get back to you. What we do know is the formula of how by the Bank of England will apply if you are on a tracker. Now, if you missed that, just make sure that you go to the pre-recorded, well, I say pre-recorded, the recorded um, video, and that will give you some insight as to what that formula, how that works from a lending perspective. I believe it would be pretty much immediately, but I could be wrong. Okay, don't hold me to that. Okay, guys, thank you very much. We've reviewed quite a fair amount today with mortgage rates and the confidence with buy-to-let investors. Bank of England potentially cutting their rates. Does it really matter when lenders are already bringing better deals to the market, whether they decrease or not? Well, that's remain to be seen. And of course, a little bit of history on the fixed rate and 2 year vs the 5 year over the course of the last few years. Listen, guys, thank you so much. Really appreciate your time. And we are doing this every Wednesday from 5:30 to 6:30. We've gone over today. But if you haven't subscribed, make sure you do. And we have that webinar for those who are concerned about regulations. We have that webinar on the link. Make sure you register. This is one that you do not want to miss. Thank you very much, guys. Much appreciated.